What's up, traders? So guys, I'm just here chilling at home, and you know, when you become a trader, you go through different stages. You go through the stage of just being very, very busy, and that's because usually you're trying to figure out what the fuck you're actually supposed to do. You're trying to learn absolutely everything that you can in the market and trying to retain all this information, and you end up with not too much time on your hands. Things then get a little bit busier even then when you do figure out what you're doing, because you're just so focused on getting as many trades out as possible. And then eventually you get to the stage where you can kind of relax a little bit, you can chill out, because you understand it's not about the quantity, it's about the quality of trade. And that means a lot of waiting around, a lot of patience, and yeah, just waiting for the right entries. And that's exactly what I'm doing right now. I'm just chilling at home on my balcony, just went to the gym. And while I'm here not doing that much, I figured this would be a good opportunity to get a sick training out to you guys, because one of the main questions that I get is, how do I know where to be entering my trades? Also exiting the trades as well. But I know a lot of you are finding positions and then retrospectively being like, fuck, I should have entered there. But how do you know actually straight off the bat where to actually enter these trades? Now, there's obviously a lot of different ways to do this, a lot of added confluences. If you've watched my trainings inside my group, you'll know this already. By the way, you can find the group below if you're not in there already. We've got a beginner's trading course completely for free. But I figured I just did this video now just to make it super clear, and I might do this in like a three part series. But today I'm going to teach you guys how to trade with the trend, how to trade trends, how to know where to enter when you're actually in these trends. And it's so simple. It's probably going to blow your mind. And what's also going to blow your mind is when you backtest it and you see just how successful it actually is. Now, as with everything, like I said earlier, it takes patience. You know, there's a lot of you guys who just want to really rush your entries, who are just so interested in just finding an entry that you're willing to take anything, when actually you should be focusing on the quality more than the quantity. And yeah, just really pacing yourself, being patient and waiting for the right opportunities. And what I'm about to show you now is going to really demonstrate just how easy it actually is. And once you've actually figured this out, once you've learned this, just how many entries it's going to provide for you throughout the day, and it's going to give you the confidence to actually do it. Now, once I've taught you this, it's going to seem super simple. And of course, every single trading strategy needs multi-layers to it. You need to find different confluences to reinforce the trade. Every time you add a confluence, it increases your probability of success by like 5-10% each time. I always say the same thing. If you're building a house, you know, you're not just going to use one material for the whole house because it will last 5 minutes. You want to make sure that you're using the best materials and a wide range that are best for different things. It's exactly the same with trading. If you use one thing to base a trade off of, you have a half decent chance of success, I'm sure. But the more things you add to it that are all pointing in the same direction, that are all supporting the same theory, buy or sell, it's going to make it, it's going to increase your probability of success tenfold. And ideally, as traders, that's what we want to do. We want to double down on precision, accuracy, and make sure that every entry has the highest probability of success. So let's get off the balcony. Let's just show you guys what we're dealing with right here. I can love this place. Just in Budapest right now. It's my place here. And just come back from the gym. This is where I played video games. Just had a bit of dinner. Place is kind of messy right now. Got a little bookcase with lots of books I don't read. Just the missus is cleaning up. Hello. And let's take you guys to the office. Office is probably also very messy right now, but we'll see how it looks. And here we are. So you're supposed to have a clean office for a clean mind, but what can I say? Guess a clean mind was never on my to-do list. Right, let's have a look at the charts. Let's do this. So guys, here we are. We are on XAU USD, we're on gold dollar, and we're on the 1 minute chart. Now, you can use this on any time frame you want. You'll get pretty similar results. Obviously, the smaller time frame you're on, the more active the chart's actually going to be, the more frequently the candles are going to be, in this case, 1 minute. Now, what we're going to be covering today is how to actually find your entries efficiently when in an uptrend and in a downtrend. Now there's ways to find entries in any market conditions, whether it's consolidation or whatever else. But today we're going to be focusing on the uptrends and the downtrends, and we're going to cover all the others. I mean, I've covered all these in the trainings in the group anyway. If you're not in the group already, you know where to find the link. But yeah, I think it might be useful to just really dissect it on here. So as you can see, probably we're in an uptrend right now. Now, for those of you who are not familiar with trading, maybe you're a complete beginner, this is what this is going to act as. This is like a beginner training for you guys. So we're going to be basically showing you what constitutes an uptrend. An uptrend is a formation for your candles that makes higher highs and higher lows each time, all getting progressively higher each time. And it's going to look a little something like this. Now, by higher highs, higher lows, you can see this is a higher high. This one is higher than this high. This one is higher than this one. This one is higher than this one. Same with the lows. We've got a higher low. This low is higher than this one. This low is higher than this one. And it gets progressively bigger and bigger as you go up. So it always has to be moving in the upward way. That's what constitutes an uptrend. And exactly the same in a downtrend as well. So it's not always going to look exactly like this. It's always going to look a little bit more crazy. You can see it's definitely not an accurate representation. But as long as we have these higher highs, bang, 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 and higher lows, bang, 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 that is an uptrend. So that's what we're looking at right now. And you know, it might be a little bit more confusing if you're a new trader, but you get used to it. And to be honest with you, as long as you can see it moving in a nice upwards motion, whether it's a strong or a weak uptrend, and as long as you're actually able to identify the peaks, like another really easy way to do this is to draw a parallel channel. And let me just find it. Where the fuck is my parallel channel? So there we are, parallel channel. And then we can actually start from like the lowest peak here. We can drag it up across the bottom and we take it up, and you can see that everything is getting higher. So it gives you a nice accurate representation each time. You can see that the peak's getting higher. You can see that the troughs are getting higher as well. So how do we actually know where to enter this thing? Because most of you at home are going to see something like this. You'll see a giant volatile spike like this. You'll see a big bullish move and you'll think it's on the way, I'm going to jump in. And then most of you will end up entering the trade like here, something like this, while it's in its big rally. And then what's going to happen, so you stop this here or whatever, it depends how big you want the trade. And what's going to happen, the trade's about, and you're going to get out. And that's because everyone's doing the same thing. The majority of the retail traders, they're getting in because they see this rally, they get themselves excited, and they want to get in on the action. So they jump the gun, they're impatient, and they end up losing out because of it. And the markets are counting on you doing this kind of thing. They're not hoping that you're smart, they're not hoping that you're patient, they're hoping that you do something stupid and just kind of get in when everyone else is getting in, which is of course not what we actually want to do. So how do we actually identify the right place to be entering these trades? Well, as I always tell you guys, support and resistance is the staple. It's the foundation of any good trade, especially when using gold dollar. Gold dollar is of course extremely reactive to all support and resistance levels, and these are not just kind of like theoretical magical lines that we just made up. They actually have a substantial part to play in every single trade. The market doesn't just respond to random limits. These things, let me just to outline it, the biggest players in the market, the people who put the most money into the market, are not the retail traders like me and you. They're big institutions and big banks, and they flood the market with billions every single day. And that's what causes these big moves. Now, these big institutions, they don't just have one guy that's sitting there deciding, oh, that looks like a good place, maybe I'll pick there. No, of course not. These are all set on algorithms, computers, and it's usually the same places every single time. And that's why you do have it respond to these limits. So what can we see from this chart right here? It looks a little bit confusing, right? It looks a little bit, I don't know, all over the place, let's say. So how do we actually know where to be getting in? If we're not getting in during this rally, what do we do? Well, actually, we wait for the pullbacks. So what can we identify on here? Let me get a box. Ooh, So So what can we see? We've got support and resistance. So let's start up by doing that. Let's measure out the support and resistance. So we've obviously got one that's around here. It's hit on both of these limits right here. That is our support line right here. Then what we got here, we've obviously knocked another one right here. This is our other support line or resistance line, depending on where you're coming from. Again, it's kind of clipped one right here. This is our other support slash resistance line. And then again here, we've got like quite a big one. And this one we can drag all the way across from here. So what can we tell from this uptrend? We can see we've had a big rally, we've hit a ceiling. I mean, even, yeah, to be fair, even right here. So we can start from the very bottom of our uptrend. Right here. So we have a big rally. Like I said, most people are going to be stupid and get in there, but actually what we want to do is we want to wait for price to retract. We want to see it start using the previous previous resistance as a support level. Support and resistance is extremely important. It's the fundamental. Understanding this is going to make your life so much easier as a trader. And all we do is we wait for it to retract and retest the once resistance level and now use it as support. So you can see big rally, we've hit a resistance level right here. We go back, we test the previous support. That is where we enter our trade. Let's try it again. We go up, could have used this one right here, but realistically, it's just more of a bit of a consolidation. This is a real deflection right here. So again, we travel up, we hit resistance, it goes back down, it hits the previous resistance, now support. This is where we enter our trade right here. Again, we see it travel up, we've hit consolidation. This is definitely a resistance level right here. So we can mark this one up, but we never actually came back down to reach it here, but nevertheless, it's come back down. It's danced along, we've got a double bottom there. It's danced along this new support line. We've had it shoot up. Again, we've hit resistance right here, and it hasn't actually retracted down to this one in the end. So, but you can see that we've definitely hit some kind of a limit right there. Even though we didn't get the pullback that we wanted, doesn't matter. We've also got the big shoot up again. We've had it dance along this line. It comes back down. It tests the support or the previous resistance. Shoots back up again. We dance along here. And then finally we get a breakthrough. Comes up, comes back down. We retest. Comes back down again. We retest. And up and up and up. Now by this point right here, we are no longer in an uptrend. You can see price is flattened out, but that is essentially how you would trade. And if you're someone like me, who, as you probably noticed, I don't want to be glued in front of the charts all day. Unfortunately, a lot of the time I am. If you're in a very solid uptrend, you don't need to make sure that you're getting all of these. It doesn't really matter. You know, there's always going to be another one. There's always going to be another one. So don't get so fixated on making sure that you get every single entry. There is always another entry. And unfortunately, it's rushing these things that ends up losing you money. The only person to blame when you're losing money really is you. Because if you really take your time, you're patient, you assess every single entry, there isn't really an excuse. Like, I mess up a trade every now and then, but then when I look back on it retrospectively, there's always a good reason for why it's happened. And 9 out of 10 times I've missed something, or, you know, I've just tried to place a trade for the sake of placing a trade, and I've done it when the market conditions aren't right, or when I'm not 100%, and yeah, it happens to all of us. But if you really take time with it, you can see it really is that simple. Is this going to work 100% of the time? Probably not. Is it going to work 90% of the time? Yes. You can see that in one uptrend we've had 1, 2, 3, 4, 5, 6 good entries out of this, and this one right here realistically could have had it once there, but would have retracted. But at least here, you would have got a nice, very solid move out of it. So next, let's have a little look at a downtrend. So here we've got a pretty clear downtrend. Again, let's actually outline what a downtrend is. We want to be seeing lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And just represent again exactly the kind of thing that we're actually looking for here. We want to see these matching up, you see. So when we get the lower high, we make the lower low, we breach, and then that that support level now becomes resistance, and we deflect off of it. And again, for this one right here, we get the lower high, the lower low, we go up, we use this now as resistance, we get a breach of the support level, we come back up, we retest it as resistance. And it's exactly the same thing that I'm going to show you right here. Let me just get rid of these things. So we can see pretty clear downtrend, lower highs, lower lows. Let's actually mark out using our box tool and see how many we would have got out of this one. So let's start at the top here. You can see we've definitely hit a limit there. So this would be our support level. We breach, comes back up, we get a retest. It's now resistance. We come back down, it's even tested it twice. We'd even move that along here. Next one that we've got this one here. We've got our lower low right here. We can drag that across. This one's actually breached twice, but we can mark them all up. You're never going to get, it might not at all come up and retest the level at all, which is completely fine as well. But it's important that we mark these out so that we can actually see where it's responding to. Prime example right here. We've come down, oh, sorry, I forgot to mark this one up. So we've got our breach, we come down, we test this support level, we go back up, we now use this as resistance, we breach, we've got a new support level, we come back up, we test this resistance and even this resistance, depending on whether you want to measure it using the candle or the wick. We get a breach, we've got a new support level, we go back up. Hasn't really tested this one or this one, it's just sort of floundered in the middle, but we're only measuring the resistance and the support on the bottoms on this one. Doesn't always have to come up and test that one. If it doesn't, we just sit this trade out. It's as simple as that. So on this one right here, we would have come up, didn't quite hit it, so we would have sat this trade out. We come back down, we test the same level, we come up. This time it does test this resistance level, comes back down, new lower low, we come back up, we retest this resistance level, we go back down, we've got a new lower low, new support, we come back up, we test actually this resistance level again, but it still works. It's still the same fundamental explanation for all of it. We go down, we didn't get a breach on this one, so that's telling us what? That we're about to reverse, we're about to change trend, come back up, one more on this, and we got that, and then yeah, we would have probably fumbled at this one because we can see that we're no longer making big lower lows on every single one, and yeah, lo and behold, we actually had a reversal here and the trend started reversing. It's as simple as that, guys. We just basically want to find, I can find what I want. We just want to remember an uptrend is this, and a downtrend is this. And when we are going to be measuring where to enter our trades, well, we want to find where we're going to be measuring our trades. We want to be highlighting the support and resistance the whole way through. And when we get a retest on this limit, like right here, for example, that is the point at which we enter our trade, or in this one right here, in a downtrend. Conversely, for an uptrend, we come up, we measure out our support and resistance levels like this. And our entry point is where we see price come back down and retest the support / resistance, depending on what you're looking on. Like I said, is this going to work 100% of the time? No, it's not going to work 100% of the time. Sometimes you're going to get times like this where it doesn't even touch the support resistance level. They're the ones that we set out. We want to apply patience. We want to make sure that every single thing we're doing has ultimate precision on it, so that we heighten our chances of success. Now, there's a lot of different things that we do to ensure 100% or at least near damn it, and that's by adding extra confluences to it, but this is a very good place to start. So guys, jump on your chart, doesn't matter what currency pairing it is, could be gold dollar, it could be pound yen, whatever, doesn't matter. Find yourself in an uptrend or a downtrend, just try this out. If it helps, like I said before, draw that parallel channel tool so it's easily to see that we're actually in a solid uptrend or a downtrend. Make sure that you're getting higher highs, higher lows, or lower highs and lower lows, and you'll get a good success rate from this alone. It's not my job here to oversimplify trading because it is complicated, but the fundamentals are very, very simple. Understand the fundamentals, master the fundamentals, the other stuff will fall into place very, very easily. So guys, it really, really is as simple as that. Like I just said there, focus on the fundamentals. If you're a new trader, you're finding all of this super overwhelming, just master the fundamentals, the things that are actually the easiest things to learn, you know, like support and resistance, like understanding different basic indicators, what they actually do, understanding how to manage your risk. These are the things really that are going to play the biggest part in your journey. And once you've got that really firm understanding, then you can start using building blocks to actually put on top of it and really perfect like a good strategy that you can actually use. Very, very simple things, but they go a hell of a long way. Now guys, if you were liking what you've just seen there, you have every opportunity right now to hit the like and subscribe button. Even drop me a comment if you've got any questions. I'll get back to all of them. I always get a lot of questions about what the indicators are on my screen. If you want some more information about that, for sure join the group or drop me a message on Instagram, Johnny_Mitchell1991. Like I said, I'm not here to overcomplicate trading. Trading is complex and simple at the same time, but really it's only as complex as we make it. If we really, really want to understand trading fully, we need to just understand the easiest parts of it, the fundamentals, and everything else slowly falls into place. If you enjoyed this, don't forget, follow my channel below, join the Telegram, free education course in there as well, like and subscribe. Cheers guys.